Hi there, Serial Trader here. Let's check in with the major US indices. So we'll just kick off with this hourly chart, so still pretty short term on SPX. And that's all I'm watching right now because still confident that we're working our way out of this triangle that's likely complete, this wave 4 triangle. But now we're just working this first impulse and then corrective decline from that impulse. Now I'll just delete this channel I had up and also this fib target, as there's some changes since last time. So I was thinking maybe we had an A, B, and we're going to have a C down for a zigzag. Okay, but that's no longer the case. But so I'm seeing this three-wave advance, okay, and we only made a marginal new high. So we made a new high of 27.42.24, and the previous high was 27.42.10. Okay, so a fraction of a point on SPX. That's essentially a double top, although slightly higher high. And what accommodates for a higher high, or in this case, a slightly higher high? Well, a flat or an expanded flat pattern. Now, if we have a real deep C wave, obviously that'll be an expanded flat. But if we just have a C wave that roughly terminates where this A wave terminated, that would be a flat pattern. So at this point, unknown which one it'll be. Although typically an expanded flat, the B wave makes a more extreme move above the previous high than this. This is more of an indicator that we'll have just a regular flat. So in that case, we'll be looking for, well, had a double top and now a decline, and then possibly looking for a double bottom, that sort of thing. That'd be what a regular flat would perform like. So in the meantime, now, of course, this could be wrong. This is just the current interpretation given the available price data. I mean, maybe we have a 1, 2, 1, 2, and we're going to go up in some crazy extended impulse wave here, although I don't believe that. And I'll get to that in a moment why on the candlestick chart on the daily. But in the meantime, here's some fib retracement levels. So this is still, I mean, if this is a 1 up, okay, a larger 1 up, and this is going to be a larger 2 down, this is, I mean, unusual to have such a shallow retracement. Say we make just a regular flat bottom and don't even make the 382 retracement. Now, I'd actually prefer if we kind of had this expanded flat, so we came down in 5 here and C, and hit at least the 50% retracement level, because that would be a more typical wave 2 retracement level. But we don't know yet. We'll see. I'll certainly be watching. So I'll get out of this chart for now. But that's just what I thought I'd highlight short term, what I think is playing out here. Definitely some consolidation here short term, in my opinion, before we can really kick off. Let's go to the candlestick chart. And SPX. Okay. And the reason why I'm fairly confident in that short-term assessment, not just based on waves, obviously, but on candlesticks. So in this case, today SPX put in a bearish engulfing candlestick, and closed not quite the low of the day, but low enough. So it's a legit bearish engulfing candlestick. We have been in this overbought condition, and we still are with my oscillator. So certainly not out of the question, according to this chart, to have some more consolidation. Still above the T-line for now, although that will likely get tested or broken if the consolidation plays out. And maybe we'll come down and just test this upper boundary line that we've actually initially had resistance, and now we've found support on in that first pullback, and maybe our second pullback, should it play out, we'll also find support there. But we'll see. So I'm still just waiting for an entry on SPY calls. Hadn't pulled the trigger yet. I'm just patiently waiting for this pullback, and now I do think it's playing out once again. So I'll move on to the Dow Jones Industrial Average. Dow also put in a bearish engulfing. Again, did not close below the T-line, but I expect it very likely to do so on further consolidation. And again, coming off the overbought condition. Now the Dow put more of a top in, like this is the initial high on the S&P, and the S&P essentially just did a double top. Well, the Dow exceeded that level, so maybe the Dow is going to be more of an expanded flat correction if it's following along with the S&P, which it typically does. but I won't get too much in the Dow since I'm not trading it. NASDAQ composite. Okay, NASDAQ composite also put in a bearish engulfing. Did not close below the T line, but again, that's likely to happen as this consolidation plays out. And the oscillator got overbought and now coming down. So that's kind of a overbought doesn't mean sell, but once overbought starts rolling over, that's more of confirmation that you know, sell time. And certainly with the bearish engulfing, that adds credibility to that. So basically, all three major U.S. indices put in a bearish engulfing today, and they were all overbought short term with my daily oscillator. So don't be surprised if it pulls back for the rest of the week, even, or something like that. Be perfectly natural at this point, but we shall see. Okay, the volatility index. Not much going on there. Still around that 13 level. So again, this is just a healthy pullback, healthy consolidation. There's no massive fear spikes or sky is falling kind of stuff going on here. So I think I'll wrap it there for now. And we'll check in as the week goes on as needed. All right, Serial Trader signing off.